Please welcome to the stage from General Catalyst, Nico Benatzos, and from Coatue Ventures, Caryn Maroney, as well as your moderator, Connie Loizos. Warm welcome.
So Caryn, your firm, Coatue,
Yep.
started as this hedge fund investing in publicly traded companies.
Yes.
Now it's got a growth arm, it's got a venture arm.
Yep.
And Nico, on the opposite end of the spectrum, you work for General Catalyst, which started as this very small venture firm in Boston and expanded into, what is now a registered investment advisor managing many billions of dollars. Nico, maybe I can ask you first. What is the outcome when everyone is doing everything?
Well, not everyone has earned the right to do everything. It's like we're talking about very few firms. In our case, we started from being an early stage firm. Early stage continues to be our core. And we learned from serving our customers, the founders, that they want to build enduring companies and they want to stay private for longer. And as a result, we felt like raising growth funds was something that could meet their demands. And we did that. And over time, we decided to become a registered investment advisor.
I've been in this industry for a long time, not in the venture industry, but in the tech industry. I started working with Mark Benioff when he was starting Salesforce from his apartment in Coatue. And at the time, Mark Benioff could not get funding because it was a new model and the traditional VCs were like, I don't understand the TAM, the market size. That was a very traditional model. It was like, we do this. Mm-hmm. So for years and years and years, we had no change in the venture world. It was like these very status quo ways of operating. And I feel like we're now in this place of pretty interesting change.
Do you think we're going to see a right sizing of the industry, going into next year?
I believe that people are fundamentally rational and intelligent. If you are a founder, you need to figure out, okay, where am I given this global economic environment and what do I need to do to make sure that I ensure the best outcome for my company? Mm-hmm. For everything, I think of it as there's 4 quadrants that a company fits into, and that sort of can help dictate what you can do. And the axis are how much money have you raised or runway do you have, and do you have product market fit? So if you have raised and you have a lot of runway and you have found product market fit, then I consider you you're a healthy company, upper right-hand quadrant. If you're in this right-hand quadrant, I would say this is a great opportunity to hire and scale and grow and take advantage. If you are very little money, but product market fit, I would call those company survivors. But it does mean getting creative with either cost cutting or how you're going to fund this. And that becomes very interesting and very important. But you have to do everything you can to make sure that your product and your company survives. Let's say you have a lot of money and you don't yet have product market fit. I call them explorers, bottom right. These people are like a typical Series A company. The important thing is to keep in mind that you don't have product market fit yet. Don't scale because, to Connie's point, we don't quite know where the markets are going to go. And then lastly, it's the danger zone are the ones that don't have product market fit and don't have capital. And those are you might need to pivot or rethink.
In terms of venture capital firms themselves, are we going to see them sort of shrinking or breaking up or looking different going forward?
Well, it's always a very dynamic ecosystem. Historically, VC firms had to go through generational transition, which is a very painful activity. We've seen over the last few years, as you were both saying, how much the ecosystem changed. Mm-hmm. We have now hundreds in San Francisco alone of very small firms, solo GPs, micro VCs. Some of them will decide to merge with each other and build a more enduring franchise. Some of them will decide that, I tried it during the good times. VC as a career option is not one for me. Mm-hmm. A number of the more well-known platforms will either stay small or when the senior partners there decide to retire, they will have to figure out what the next day is going to look like. We're all products of the markets and the times we operate in.
Right. What percentage, I guess, of your respective firms are you focused on, the big hubs versus everywhere else in the world?
We just opened an office in Europe. I did a seed deal from a group in Singapore recently. Partly, I don't know if I could have done that before COVID. So I'm very hopeful to have yes and, because there was a great ability to meet more companies in a more efficient way. I am hopeful that it stays broader than just Silicon Valley.
I mean, talent's universal, opportunity is not. Firms like ours want to be investing in category leaders. We don't check founders' passports wherever they come from. We'll be thrilled to have a quick 30-minute Zoom conversation and see where the journey takes us. About 70% of the capital that we've raised from our awesome limited partners we invested in the US. We also have an office in London. We're getting more and more excited about India, and we're investing overseas. I don't think Zoom investing is going to go away. Like, it's very efficient.
I'd also done a story recently on board meetings not happening as much.
Seriously, don't skip it. Because
No, don't skip the board meeting.
It's a great way for founders to use their investors
Yeah.
as the bad caps to organize and rally everybody at the company to get shit done.
Do not miss the opportunity to have a deadline for your team. Your board can help you hold your teams accountable, and it's a wonderful opportunity.
I also just wanted to ask what terms look like right now.
So we are seeing meeting activity at an all-time high pretty much since like late August, and we'll know by the end of October how many of these terrific conversations will result in transactions. The best of my knowledge, I haven't seen companies decide to raise a Series A with like really nasty terms, but of course we've seen these processes take longer than before. We've seen also, some companies decide to raise like a bridge round if they can't get to the Series A in the short period of time that they would have liked. Thanks to the media and all of us getting prepared, a ton of founders made the right call in Q1 and Q2 to downsize. So everybody bought themselves more time. Most of the companies raised a lot of capital in the previous years. So the bulk of the pain, unless there's a crazy strong recovery, is to come up.
People want to control our own destiny. How do I do that? How do I have as much control and outside of whatever is going to happen in the market? And it used to be you needed 12 months of runway, and then it was like, no, you probably need 24, and now it's actually 2 is the new 1, 3 is the new 2. And the whole goal is to have that ability to have flexibility so you can experiment and understand what does this need to exist in the world. But it used to be the answer when capital was cheap was grow and do it all. And now this ability to sequence the steps is incredibly important because the resources and the need to sequence the resources versus do all the things has probably become one of the founders' greatest skills.
What are we going to do with all these companies, these many, many, many companies that have gotten funded and have nowhere to go right now?
There's so many tech companies that are doing really, really well. They have a lot of cash on their balance sheet, and hopefully at some point, especially now that valuation seems to be more rationalized, they will need to innovate through some M&A. In our industry, especially for the large firms like ours, yeah, we want to see some smaller exits, but it's about the enduring companies that really can go the distance and produce a 100x return and pay for the whole vintage, right, or the whole portfolio. So it's an interesting time, what's going on right now in the exit landscape. With the terms rationalizing, I would assume to see more M&A.